All right, guys, welcome. Um, Here at Insider Flow, we do a lot of price action trading and price action setups. So today we're going to talk about the rising volume to two setup that I enjoy swinging. It can take up to a week to pan out, so it really is a swing, and it's definitely higher risk compared to our inside day moves or our 1 to 3 moves or our just overall breakout plays. But the upside can be more rewarding because you are holding long. So let's get in. All right, so the basic premise of the setup is a red bar with red volume. And this red bar can be a 3 or a 2, which means an outside day or just an up or down day. It cannot be an inside day because that is a completely different setup. So what we're going to look at here is looking for a move in the upward direction or the downward direction with rising volume. So it's a 2-day waiting period before you get entry, before you enter your swing. And what we need is 2 green days in a row or 2 red days in a row following a red or a green day. So if it's a green and then 2 red, that's a bearish move. If it's red and 2 green, then that's a bullish move. So you are going to be waiting and looking at these setups. I'm thinking about letting this into the channel. You guys can comment below. Let me know if you guys are interested in this after we go through this whole thing. Or if you're just like, no, this is not for me. It's fine too. I would say 1 out of every 7 plays I take is this because it does take longer to develop, but it is trying to catch trends. You always want to try to be trading with the trend. We will be going over in another video how to catch reversals. Again, it's seemingly that each video I put out, it's becoming the strategy is becoming riskier and riskier, but the upside becomes higher that way. So let's get into this. I will show you exactly what I mean. So we're looking for, let's see here. Okay, here's one. We have a red day, a red 2-day, which just means, a down day from the last day. We have a red bar. So now we're on watch for a reversal. This reversal can happen one of 2 ways. So the first way is we get the inside bar and we set up and we go one way or the other. Not so much reversal, just a confirmation of a trend, or we get the trend change reversal, which is exactly what we're about to be trading, which is this. So we get the red bar. Now we're looking, okay, we get our first green bar. What we need next, actually, you know what I'm going to do? What we need next after this red bar, so here's the view on the daily chart. Red bar. Okay. We go forward. We get, okay, here's our green bar. Now we're watching. Can we get one more green bar on a rising volume? So the volume needs to be greater than this bar, and it needs to be green. Boom, we get it. So our entry is 265.12. Contracts again are near the money, or at least if you're going to go out of the money, pick a point where there is the next resistance, because you want to sell into resistance. You don't want to be trying to break resistance. This is not a breakout play. So 278 would be the top line. I wouldn't even go that far, but I would say 277 contracts. And you're not taking weeklies. We don't want to deal with theta. You're taking monthlies or even a month to out, because these do take time to develop. Okay. Which makes it a little more expensive, obviously, but for those who can trade it. So your entry is looking at 265.12. Now you can skim this entry, like you can enter at 261.57. If you're on the 30-minute chart and it's showing, it's 2 p.m. and it's showing that it's going to be closing with higher volume on the day, and it's going to be closing above this candle, then by all means enter. You don't need a wait for close. I'm just doing the worst case scenario entry. So worst case scenario entry is 265.12. The next day you have a peak of 271, 272-ish. Let's see, high is 271.94. So there's one day you can take profit. That right there, that's a $6 profit overnight. You can take that profit if you want to, or you can continue to hold. I would say take that. I mean, you're not going to find a $6 profit really anywhere else. I don't know what your goal is. If you're trading a stock and you get a $6 profit on your premium, I don't know what you're waiting for as far as taking profit. So moving forward, we do get the reversal. So taking profit would have been smart. So the reason why this is not a play that we would take after the green bar is because look, after the green bar, we sell our position. Now we're looking short because we have a red day. We would need higher volume, but we don't get higher volume, and we barely close below that bar. So we wouldn't be taking this trade. All right, let's reset the chart. Find another one here. Nope, that's descending volume. Even that goes up, and you get a huge rip down. So, okay. We kind of just ran into a situation where we could do this. It's coming from an inside day move. You get a red bar, you get higher volume. I personally actually don't like big red candles. I just personally don't like them. I know a lot. All right, so here's the move with this trade. Here's why I don't like big red bars, because if we ended up here, right, if the bar only went to 261, we would still have a lot of room left. We'd have about $10 left to play with as far as until our we used our first take profit, 250. Right now, it's just a $4 move. So if you entered here at the close of the day, and again, you could totally have entered, I mean, at 265, at 272, 269. Again, if you want to look down at the 30-minute chart, here's what I would do. Let's see, what day was it? What day's? So yesterday. So if you enter in yesterday, I would look at the previous support line and say, okay, I'm going to wait for a close below that. So 265 or 264 is your best entry, which is fine. That's actually a great entry. 264 is like right here. 265, 264 area. So let's say you get the best entry, you're there. The worst entry, obviously, is 255. And you have rising volume. And I think the point that it broke below that previous previous support line, it would have rising volume on the day. So here's what you run into with these big bars. Now you have an inside day. In our room, we're going to play that long or short. We're going to let the price action tell us what to do. You might get an outside day. We don't know, but I'm going to be scalping it as long as it closes above or below it. So if you're in this swing trade at the worst possible entry, which is 255.75 or 77, you're opening here. You're $2 lost on the open, and now you're down here. You're $1. You're $1 ahead now on your trade. But here's the thing: your take profit really is right here, like in this zone, 253, 252 area. So you might get a $3 move on this, which is great. But again, these huge exhaustion bars just kind of scare me. I just don't love trading them. So that's that scenario. Let's look at another one. All right, here's another one right here. So we get a 2 down move, and now we're looking. So we have a green bar, 2 down move. We're looking. Okay, will the next bar be? Let me disable this. Good pin bar. This is confusing. So will we get it? We get kind of a gap down, which we're not worried about gaps. Gaps are fine in the strategy. We do get a pin bar, but it's rising volume and a red bar. So we're entering short at 259.09. The next day we open at 257, so $2 already in our favor on the premium. Again, you're looking kind of this way. Where's my take profit area? You're looking kind of down here, right? Down here in this mid zone, so 251 to 248. Okay. So you get a red bar. You could take profit there. That's fine. You kind of have an up move here on another kind of push down day. Now your volume's fading. You do get a green bar, but this green bar does push down all the way to 253. So again, from 258 to 253, if you're not taking profit there, or at least taking some off the table, I can't help you. You should be taking some off the table, if not 3/4 of your trade. And then you can leave a runner for moments like this, where you get a, what is it? Almost a $20 move in your favor. It's about 18 bucks. So that's why I say make sure you look left to see the zones, because look what happened. You basically bopped all the way down to this demand area, and now you're reversing, right? And then we get our second trade. So you can play this every which way. This was our first example, was the rising volume. Boom, you're in, right? So that's another example of how to take profit in these situations, how long you might have to wait. That's a 1, 2, 3, $4 day waiting period. Again, that's why theta matters. All right, guys, one last kind of thought and recap. When you're doing this, when you're trading this, you're looking for rising volume off of a red day. You do not enter on the first green day. You wait for a second green day, enter at close, or afternoon when you are sure the volume is higher than the previous day, and you're taking contracts for the money, and you're riding this out to resistance or on the bullish side, and support on the bearish side. So guys, that's another setup. If you guys want this implemented into the channel of call outs, let me know. I will think about adding and think about how to organize this and add this into the room, because I do think it's another swing trading strategy that people can implement who don't want to sit there and watch charts all day long. They like to wake up to profits. All right, guys, thank you.